These are peak losses. They are, in fact, adding subscribers. That's a good thing. Guy, do we look through this?
So it's a binary yes or no. The answer is no, you shouldn't believe them. And what we're seeing here is exactly what Tom Rogers has been talking about for a long time, but specifically for the last 5 or 6 months. And now the divergence between Netflix and Disney is abundantly clear, and Tom's done a great job. So no, you shouldn't believe them. When you miss on the listen, EPS came in at 30 cents. They missed by 46% on EPS and a revenue miss. That's not good. And then, okay, they added subscribers. Problem is, ARPU for Disney Plus was $3.91. Street was looking for $4.24. That's not good. The only compelling case you can make now, by the way, Disney was in the D in my Dawn trade, which now is becoming Dawn of the Dead trade. I beat you to that punch because that's exactly what's going on. This is a level we traded down to in March of 2020-ish. So it's got to hold effectively $90 to trade the stock from the long side.
That seems like an important milestone, Carter.
It is. In fact, it's basically where it was in 2015. So you've got a stock that's done nothing, which is representing major underperformance in the market. But it's also a stock that now is at risk of breaking to and below its June low. So we know the stock market makes a June low, that it breaks that low in October. Disney never made a low in October, and now that prospect is at hand.
So now streaming is actually a headwind, a discount.
It is. I mean, what did we just hear? So we heard a couple things about an ad-supported model, and they have 100 advertisers. If there's ever a better company to kind of line them up, I couldn't think of it than Disney here. They have a higher priced tier, so they're going to raise prices. If you look at Disney Plus, ESPN Plus, and Hulu, they have more monthly paying subscribers than Netflix does, and I would argue that they have like a far greater reach and a far greater potential. You know, like I cut the cord, okay, and you know how I get my cable? Through Hulu, you know, and I have a package there that what
Guy has no idea what you're talking about.
Well, I'm just saying that, and I've been doing that for a few years now. So to me, I actually think that to these guys' point, it's going to break that 90. That's that double bottom from this year. You have to go back to March of 2020, and there's that low during the pandemic, which was $80. And if you get to the low end, I just don't see a lot of risk, guys, with an 8 handle on this thing. I'm just telling you, if you start buying it in the high 80s all the way down to the 80, that panic low, and I really do think, again, we can say that estimates are coming down. That was the biggest miss in EPS since the 90s. They missed revenue by 5%. You know, this headwind, that headwind, whatever. It's still Disney, and if you're buying this thing at some point at 10-year lows, which is what you're going to be doing, I think it's probably not a bad opportunity.
But you don't have capitulation yet, right? The street is, I mean, the street 1 year ago had a $200 price target. Now it's $145.
But that's going to come.
And that's going to come down.
Can't we make the argument, though, for all of these stocks, we're looking at them as individual names that are reacting to their own specific fundamentals here, and there's been some dispersion, and there's been some basically rotation out of tech and media and stuff like that. But the capitulation has to come as a monolith. Okay, as the market. And that's why we're not going to bottom this month or last month or anything like that.
I mean,